An offer in compromise is a deal to settle for less. It's something set up by Congress to allow taxpayers who are indefinitely over their heads settle for less and get on with their lives. And the premise behind an offer in compromise is to give you a fresh start, get you back into the tax system so that you're a productive tax-paying member of society instead of doing what it's very likely that you have been doing, which is putting off the pain of dealing with your IRS problem, and it's just getting worse and worse every year. My name's Darrin Mish, and I'm an attorney, and I run a law firm out of Tampa, Florida, and we represent taxpayers nationally and internationally with their problems with the IRS. That's all we do there, and so we've gotten very good at it over the years. You're probably familiar with the website, getirshelp.com. In fact, you might be watching this video on getirshelp.com, and I welcome you to visit. If you haven't visited, come on by and take a look. There's a lot of free information on the site, a tremendous amount of information that can be very helpful to you. Now, an offer in compromise is not a deal or a giveaway. It's a program designed to determine exactly how much you can afford to pay, no more or no less. And you'll see in a minute when I get into the technical details of exactly how an offer is calculated, and you'll understand what I'm talking about. But the idea of an offer is for the IRS to determine exactly how much you can afford to pay, no more, no less. So if you owe $100,000 and you have equity in your home of $200,000, then it's not very likely that you're going to get an offer in compromise, and that makes sense, doesn't it? If I was your creditor, if I owed you $100,000, and you were determining whether or not or how aggressively you were going to come after me in terms of collecting that money, you'd want to take a look at all my assets, so my home and all my other assets, and you'd also want to take a look at my ability to earn, my monthly disposable income, what I have on a monthly basis to pay you, and that's exactly what the offer and compromise program does as well. Now, the formula is really easy to understand once I explain it to you, but let me go ahead and break it down. The first step that you have to look at is we need to come to a figure called your monthly disposable income, and the monthly disposable income is actually the difference between your monthly income, so your gross income from your job or your small business or whatever, and then the IRS is going to go ahead and subtract out what are known as your monthly, quote, allowable expenses. And you heard me go ahead and make some emphasis there on the word allowable. It's the IRS's opinion of what's allowable, not really what you think is necessary. Okay? So technically, the IRS talks about allowable expenses as reasonable and necessary expenses, and there's some loopholes and there's some standards and things like that, but basically allowable expenses are expenses that are broken down into formulas and into worksheets that we have access to and we can help you with. But I don't want you to be under the misimpression that your allowable expenses are liberal or generous, because in fact they're very draconian, they're very conservative, and they're not very realistic in my opinion. In fact, many IRS employees will tell you the same. So the second step is to find out how to calculate your offer. And this slide actually doesn't do it justice. The way you calculate your offer is you take your monthly disposable, for a cash offer anyway, that's what we're going to talk about here for a second. A cash offer is determined by taking your monthly disposable income, multiplying it by 48, adding in your assets, and that equals your offer amount. So if you want me to go ahead and put some numbers to that, this is how that works. If you had $50 in monthly disposable income and you multiply that by 48 plus your assets, let's assume your assets were zero, that would mean that your offer amount would be $2,400. Now it doesn't matter how much you owe at all. It matters what you can afford to pay. So in that illustration, and by no means is that your situation, it's just something being offered up so you understand what the formula is, then you would be able to offer $2,400, and the IRS, in theory, if everything checked out, they should accept that. Now that's a cash offer. A cash offer is payable within 5 months. So it takes I don't know, something like 6 months for them to investigate an offer minimally anyway, and then after they say yes to that $2,400 in that scenario, then you would have another 5 months to go ahead and pay that off. You can pay it off in one lump sum, or you can pay it off in 5 monthly equal installments. It doesn't really matter, but it's got to be paid in full within 5 months. Now there's also a a catch to an offer in compromise, and that is you have to stay current for 5 years after the offer is accepted and paid. Now, what does that mean to stay current? That means you need to file your returns on time every year, and you need to pay on time every year. So if you continue to do whatever it was that got you in this mess to begin with, immediately after an accepted offer, then it's going to come back. It's going to be accelerated with all the tax penalties and interest, and come back, and it's going to haunt you big time the next time. So you're going to want to go ahead and stay on the straight and narrow for that 5 years. You're kind of on probation during that time frame, but if you get a good enough deal, it's certainly worth that risk. Now, it's interesting to note that there's nothing magic about an offer in compromise. It's all numbers. It all fits into that formula that I gave you for the cash offer. Now, there's a couple other types of offer as well in terms of how to calculate and how long the payout is. One of those is called a short-term deferred offer, and that's payable out over 24 months instead of 5 months, as in the cash offer scenario. The 24-month period, you need to make equal monthly installment payments. And the multiplier changes quite a bit. So if your monthly disposable income was $50, as in our first example, then you're going to take that $50 and multiply it by 60 this time, plus your assets, and we'll assume 0 again. So that comes out to a dollar figure of $3,000 total, but divided by 24 months. So that means that you're going to make 24 monthly installments of $125 per month until the 2 years has elapsed. Now, interestingly, if you're going to make a short-term deferred offer, and you know that's what you're going to do right off the get-go, you're going to have to go ahead, instead of making a 20% down payment when you make your offer in compromise like you would in a cash offer situation, you're going to go ahead and just start making your monthly payments, your monthly proposed payments of $125 until the offer is either accepted or rejected. Now, it's interesting to note that it doesn't make a lot of sense to me anyway, that if you can only afford to pay $50 a month, how in the world are you going to pay $125? Well, the answer is you're going to get that money from some outside source, be it your friends, family, whatever. But it can't be your money. By definition, it cannot be your money. It has to come from some outside source. So that's one of many reasons why I'm not a big fan of short-term deferred offers. Now, there is one last type of offer. It's called a long-term deferred offer. And I need to explain another principle first before I go ahead and explain what that really means. And that is that there is a statute of limitations for the collection of tax. And that is 10 years from the date of the assessment of the tax. And I can't really tell you how long of a statute of limitations, how many months you have left on your statute, because of course I don't even know you yet. But we're going to use 10 years in this particular example. Okay? So a long-term deferred offer means you're going to pay some monthly payment for the life or the number of months left on the collection statute. So if you had 10 years left on the collection statute, that's 120 months. So we're going to take your monthly disposable income number. Again, we're going to use that $50 number. We're going to multiply that by 120. That's $6,000. And we're adding your assets. We're again going to assume 0 in assets, so it's $6,000 total. And depending on how much money you owe to the IRS, that could be a fantastic deal. Now, here's the catch. You have to make those $50 payments for 120 months. You have to make them on time for 120 months. At the conclusion of that, then your liens will be released and your tax debt will be forgiven. You still have that 5-year probation period, and so then you're going to have to make sure that you do everything right during the 10 years and for the 5 years to follow. Now, for a lot of reasons, I would not normally recommend that as a course of action, but it is an available course of action. You would also begin to make your monthly payments when you filed the offer in compromise, just as you had to do in your short-term offer scenario as well. Now, again, going back to it's not magic, it's just numbers. Remember that anyone who talks to you on the phone for a few minutes and says, "Oh, I think we can settle that for 10 cents on the dollar, 12 cents on the dollar, or 80 cents on the dollar," if they haven't gotten detailed financial information from you and detailed information from the IRS, they're blowing smoke and mirrors to you. They don't know what the situation is. They're basically trying to sell you what it is you want to hear. And we don't do that in my office. What we do in our office in every case is we get a power of attorney signed by you, which allows us to communicate with the IRS so that you don't have to. The next thing we do is we do a detailed Freedom of Information Act request so that we can get your transcript information from the government so that we can see what the government thinks is going on in your case, and we can determine how many months you have left on the collection statute of limitations. And the last thing that we do is we help you fill out your financial statements so that we can understand where you are in terms of your financial ability to pay, your monthly ability to pay. We can also advise you as to how to best spend your money to put yourself in the best situation for the IRS to collect or not collect, whatever the case may be. Again, if anyone guarantees you that an offer in compromise is going to be accepted, in any conversation, really, especially in a very short conversation, then you need to get out of Dodge, because there's no way that anybody that's honest in this business is going to be able to tell you that an offer in compromise is guaranteed to be accepted. If you look closely at those guarantees of the big national players in the offer in compromise mill business, you'll see that their guarantee is that they'll fill out the paperwork correctly for you. Well, heck, we can guarantee that we'll fill out the paperwork correctly for you. If there's some kind of error or mistake, we'll definitely fix it. But nobody can guarantee that an offer on compromise is going to go through. There's just too many variables. We talked about earlier the difference of the cash offer, the short-term deferred offer, and the long-term deferred offer. Again, the cash offer is a short-term offer that's payable within 90 days of acceptance of the offer. I beg your pardon, within 5 months of the acceptance of the offer. The short-term offer is paid out over a 24-month period, and the long-term deferred offer is payable out over the number of months left on the collection statute. In order to fill out or file an offer in compromise, you're going to need to fill out some documents, and those documents are a 433A, a collection information statement for individuals or self-employed people, or a 433B if you're a corporation or an LLC. If you have a 433, if you have a LLC or a corporation and you want to file an offer in compromise for yourself personally, then you need to do both the 433A and the 433B. And if you're only going to file an offer for your business, then you're just going to go ahead and file the Form 433B. There's also a Form 656. That's the actual offer and compromise form. You're going to need at least 3 months documentation, including your bank statements and everything else to prove your expenses and your income. There's a $150 filing fee, and there's a check for a 20% down payment on a cash offer. Those checks are made out to the U.S. Treasury. And you're going to want to go ahead and designate those to the time period that you think is most beneficial for that money to go to if in fact your offer is not accepted. If you have more questions about the offer process and how you might, or whether you might be eligible for an offer in compromise, give us a call. We're in Tampa, Florida, but we represent clients all over the United States and in fact all over the world. Just give us a call toll free at 888-GET-MISH. That's 888-438-6474. The local number is 813-229-7100, or you can always reach us at getirshelp.com. Email us, contact us at getirshelp.com. I look forward to meeting you. I look forward to personally speaking with you, and I look forward to getting the IRS off your back once and for all.